Article 59, Conditions and Mechanism of Input Tax Adjustment. This article explains the situations where a taxable person needs to adjust the input tax they have already claimed, due to changes in how they intend to use or actually use the relevant goods or services. The executive regulation of the decree law will provide further details, conditions, and mechanisms for carrying out such adjustments. 1. Change in use from taxable to non-taxable purpose. A taxable person might initially claim input tax on goods or services, believing they will be used to make taxable supplies. However, before those taxable supplies occur, the person changes the use of the goods or services to something else, such as: when goods or services are used for exempt supplies or non-business purposes such as personal use, the taxable person must adjust the previously recovered input tax as they are no longer fully linked to taxable activities. 2. Change in use from exempt or non-business to taxable purpose. A taxable person might initially attribute input tax to exempt supplies or non-business activities, where input tax recovery is not allowed. However, if the person changes the use of the goods or services before making those exempt supplies, for example, deciding instead to use them to make taxable supplies, they may be entitled to adjust the input tax and recover more than initially expected. 3. Executive Regulation Guidelines. For both cases, the taxable person must follow the conditions, calculations, and procedures set out in the executive regulation of this decree law. These rules clarify when adjustments are required, how to calculate the adjustment amount, and how to report it in the tax return. 4. Objective of Input Tax Adjustment Rules. The aim of these rules is to ensure that input tax recovery accurately reflects how goods and services are actually used. This prevents incorrect recovery where goods shift from taxable to non-taxable use, and vice versa, ensuring fair and accurate VAT treatment. 5. Compliance Responsibility. Each taxable person is responsible for monitoring changes in the use of goods and services and making necessary adjustments in accordance with the executive regulation. They must also maintain records of the original intended use and actual use, ensuring the adjustment mechanism is applied correctly. 6. Example for clarity. A company buys office equipment and recovers full input tax because the equipment was intended for use in its taxable consultancy business. Later, the company decides to use the equipment for exempt financial advisory services. An adjustment would be required to reduce the amount of input tax recovered, reflecting the fact that the equipment is no longer linked to a taxable activity. For more details, contact us.